Good morning, guys. Today it will be a little bit different kind of video. It won't be any stock specific, but I would today talk about how to invest or make money from the market. First of all, I would emphasize on one thing that is very important and that is very pertinent to many of us. That is, we generally get engaged in trading initially in the market, so which is a big negative side of the overall thing, which we should not, or at least we should not continue if we initially do also, because initially we come in the market and we have zero idea about how it works. We have zero idea how stock, what what the value of a stock or a company is. We only know what it is shown in the screen as a price, and it changes second by second, and it tempts us to react. We sometimes we get greedy and we buy when the stock goes up, anticipating it will go further, and when we sell, when we get fearful when the stock falls drastically, and whenever we cut our position when we see that the stock price has moved up. So this is something that has occurred with all of us. I think it is, everyone thinks that when he or she buys the stock goes down, and when he or she sells the stock goes up. But it is not how uh, actually it is not what happens to someone particular, but it happens to anyone who does not have control over his emotion, and he acts out of fear and greed. So the trading, what happens is, we don't if we put out in a very simplistic manner, we don't have a very good risk reward ratio. The entry and exit point are also not good. By risk reward ratio, I mean to say, if we if stock goes up, we are very you know anticipating we are anticipating when to cut the position and book profit, but very few of us are able to ride the profit and cut our position when the stock moves. Say if your stock goes from 10 rupees to 25, very few of us will be able to ride the stock and cut our position at after 20 to 25. We will mostly will get out around 10, 50, 11, 15, 12, something like that. But when the stock goes down, we cling on to it, and we think our prices will come, and then we will cut our position, and eventually what happens is stock goes further down, and we even once loss from one single position would exceed the cumulative profit that we may generate from other position. So this is what happens in the trading, because we don't know when to cut position, because the stock in a short term basis, stock goes up, then it will come down also because of traders activity. This is where the this is where the difference between trading and investment lies. In investment, the profit and risk or reward ratio is very significantly more towards the investor, because or is very healthy. Because if say if you have 5 stocks in a portfolio, even if one of the stock can become multi-bagger or say 3 or 4 times, it can preserve your wealth and at least keep your capital safe, because it will cover for all, even if all the rest of the all of the positions go to zero, which is very unlikely, because stocks don't go zero unless or until something very something very something happens which is very negative for the company. Say what happened in the Yes Bank or Gensol we have seen. So stock don't go to zero. It may fall say up to 70%, 60%, whatever, 40%, but stock don't go to zero. And if the earning comes up, and the stock's price will come up. When if it goes down, so it will eventually even if you buy a stock at a very expensive price, say P ratio of 90 with a growth of 20, then also the stock price you may find your find the even if then also if the stock goes down, it will eventually come up if the company can grow in that rate. So you may find your capital back within few years. And one of the stocks in your portfolio among the 5 is say giving you multi-bagger return, then your portfolio will overall perform very good. So we need to just hang on to our winners and don't cut our position from the winning stocks. And about the whatever I would say about the losing stocks, don't average it out, just keep it as how it is, because as Warren Buffett says, don't flower your weeds and cut your flower. Don't water your weeds and cut your flowers, because you don't know which stock will give you multi-bagger returns. So at least don't cut positions from the winning or profitable stocks. And about the loss making stocks, don't add position. That is the simple way to make profit from the stock market. And we need to buy the stocks at a decent valuation also. That is very important. Otherwise when we will buy, in the next moment we will see the stock going down, and even if the company is giving good result, then also it will take years for the stock prices to come to our buying level. So this is what I had to for today, and this is what I had to share with you guys. This video what I have just shared with you, it may not be related with a particular stock or how to pick stocks, but this is a formula I have seen working in works very well if we can cling on to the very good idea of it, and don't lose hope when the stock prices go down. Because if we have 10 stocks in a portfolio, it is very, even if one does not have much stock ideas, it is very likely that he or she can or may have 2 or 3 very good stocks among the 10 stocks, even if he is not a very good analyst also. And even if analysts are also not able to generate more than 50 or 60% stocks which will be having good return in the long term, because this is the nature of the market, that even the Warren Buffett has also very say 3 out of One out of every three decisions that she had taken regarding stock was not very good in the long term. So even someone who is expert also makes mistake, and someone who is very, say, in a very nascent stage can has also the ability to pick stock and at least hold on to it. There is nothing extraordinary required to hold a stock. Only you need to make sure that you know the thing that you need to hold the winner and don't add position in the losing positions. So that is what I had to share with you guys. Thank you, and we'll see you next video.